All right, thanks for having us. Thanks for the intro. So we are aware that this is of varying degrees of relevance for you, depending on what state that you've come from. And we're also aware that this is a really hard topic, especially after lunch. And so the way that we're going to try and communicate it is in a manner that's relevant and relatable for your students, and hopefully is a bit more interesting to teach than is what's in the textbook. So the plan, to sort of talk about MPI, we need to know a bit about the banking system. So we're going to go through that. We're then going to talk about the cash market and teaching the corridor system, which is what's in your textbooks and how we implemented monetary policy prior to the pandemic. Then we're going to talk about how the pandemic changed everything. And we're going to talk about the future, because we're actually going to be implementing monetary policy in a different way to what we did prior to COVID. And then Ben, who is on the dealing side of the team, I work on the analysis side, is going to talk a little bit about what it's like to be a dealer in the central bank. But first, I'm going to set up the banking system. So in a nutshell, the banking system works like this. Much like you have an account at a bank, all the banks have an account with us. And the government, the federal government, not the state governments, also has an account with us, and that sits outside of the banking system. And so the way that payments are made in the economy between banks and the government is via their accounts that they hold at the RBA. And it's just some terminology that we're going to need to sort of take you through the presentation. The first is exchange settlement, or ES balances. So we refer to these as ES balances, reserves, cash, liquidity. So sorry if we use any of those terms throughout the presentation. They all mean ES balances. And this is the electronic money that banks hold in their accounts with us and use to make payments to each other and also trade with each other in the cash market. And we also need to know about the cash market, which is an overnight unsecured market where banks borrow and lend ES balances. The fact that it's unsecured just means that they borrow and lend without any security or collateral posted. So you think about when you take out a mortgage, the asset is the collateral for the money that the bank gives you. It's the cash market is not like that. In the cash market, they just borrow and lend unsecured. So this is our stylized picture of the banking system. So we've got the RBA in the middle there, and on the right, I should be pointing over here, sorry. On the right, we have the commercial banks, and you and businesses have accounts with commercial banks. The wallets there are the bank's ES accounts at the RBA. You can see we've got some balances in those ES accounts. Then on the other side of the ledger, we have the government, who also have their account with us. And then in the middle of it all is the cash market. So I've just thrown through a few quick examples of how payments might occur in the economy. So say you've made a purchase, you've bought something, and you've paid for that, taking money from your bank account. What's actually going to happen to settle that payment is funds are going to be taken from your bank's ES account and transferred to the account of the business. And that's going to occur via those bank's ES accounts. So the balances go from your ES account to the ES account at the bank that the business uses. Another example is when the government makes a payment to you. So say you receive a Medicare payment from the government. What happens in practice is the government will transfer funds from its account with us to the bank's ES account that you use. And then the bank will deposit those funds in your bank account. So you can imagine that there's millions of payments occurring in the payment system every day. There's probably thousands that have happened since we started this presentation. And this is really the bread and butter of banking, settling payments between banks. And the monetary policy implementation system sits on top of this payments infrastructure. So it's really important context, and hopefully the way that we've explained it is sort of relatable for your students, because they can sort of say, oh yeah, I make payments and this is how it actually, the RBA is involved in that. So I'll just set up the cash market. It's probably a graph you're all familiar with. So on the x-axis here, we have ES balances, and on the y-axis, we have the price of cash in the cash market, which is the cash rate. We set the cash rate target at the board meeting, which occurs how many times? 8 times a year now. And in the cash market, we have a downward sloping demand curve, because the lower the cash rate in the cash market, the more ES balances banks are going to be willing to borrow. We also have supply in the cash market, and the supply curve is vertical. And the reason for that is that the RBA has historically really tightly controlled what the supply of ES balances in the banking system is going to be. So prior to COVID, we made sure that there was only just enough ES balances so that all the banks could settle payments in the payment system and make payments to and from the government, as I sort of gave with those two examples. So the reason the supply curve is vertical is because no matter the cash rate, the RBA sets a particular level of ES balances such that there's enough cash in the system so that the cash rate trades at target. Then we have the RBA lending rate and RBA deposit rate. So these are facilities, overnight facilities that we have at the RBA that banks can deposit ES balances with us and borrow ES balances with us overnight. These are set above and below the cash rate target, and together they form the policy interest rate corridor. And it's the policy interest rate corridor which determines the range in which the cash rate will trade. And Ben can talk a little bit more about that when we describe the corridor system. All right, so I'll pass on to Ben.
Thanks, Gigi. So I'm going to talk about what happened in the old system, the pre-pandemic system, the corridor. We're going to go through a day in the life of the corridor so you can see what that's like. It's going to be really, really fun. One extra bit of terminology we need is this thing called open market operations, which you might have heard of before. Sometimes we call it OMO. And broadly defined, that's any operation that the RBA does in financial markets that will increase or decrease those ES balances. So primarily we do these things called repurchase agreements or repos, where we lend on a collateralized basis some cash out, or in reverse, we may borrow some cash out to reduce ES balances. But there are a few other ways we can do it as well. I'm not going to talk about those for now. If there's questions, of course, at the end, we can do that. So think of these open market operations as a way for us to send out ES balances into the system or remove ES balances from the system if we need to. Okay. Fantastic. Okay, let's go through a normal day in the old system. We're in the pre-corridor, we're in the corridor world in the pre-pandemic. And then today is going to be everyone's lucky day because we've got a massive tax payment that's due to the government, which is very lucky for us. So maybe it's the quarterly BAS payments perhaps that businesses have to make to the government. So in the morning, here we are, we're going to start with just a little bit of funds in the government's account there on the left. And you can see most of the banks have a very small amount of ES balances, which I've very artfully made either no bar or just one bar there. You can see Bank D is doing a little bit better than the others. Okay. So we're going to do our morning OMO. So in this case, the RBA staff are all working very hard. They're aware that there's this big tax payment that needs to be facilitated from the bank's customers' accounts to the ATO. So the RBA is willing and happy to inject those ES balances into the system, and Bank A, Bank C, and Bank B have come and they've borrowed those amounts circled in red there. So you can see those little boxes that are square. So we've increased the ES balances late in the morning. This usually happens around 10 a.m., but we'll talk more about that later. Okay, so then, of course, we've got this tax payment that's due. And like Gigi said, in practice, what happens with the tax payments is the customers go to the ATO's portal in some way or another, and they say, well, I've got my bank details here. I'm going to pay my tax that's due to the ATO. And what happens in this market is that the banks transfer from their own ES balance account via the RBA through to the government's account. And you can see here, Bank A, Bank C are back at having almost no ES balances, and Bank B has actually gone into deficit there. Okay, but we've also, it's a normal day, we've got other payments going on as well. Gigi and I decided that we're going to go to lunch that day, and we're going to go halves in the bill, but Gigi's picked it up at the restaurant. Thanks, Gigi. So I owe him some money. So I bank with Bank C, Gigi banks with Bank A, and so I've had to instruct my bank to send some money to Gigi using a normal banking app. And so we can see as a result, my bank's ES account has gone into negative and Gigi's ES account has gone more into positive because I guess it was a very expensive lunch that we had that day. A few $100 million for a nice steak, maybe. Pretty good. Pretty good. That's exactly right. Yeah. Okay. So what happens at the end of the day then? Well, we've got these banks, Bank C and Bank B, that have negative or below their required amount of ES balances. There's some details there, but we can think of them as being in deficit, and we can't have that proceed on an ongoing basis. So the banks use the cash market to get their balances back to where they need to be. We call it squaring up. And so what we have in practice here, if I go back and forth between these slides, is you can see that Bank C and Bank B are negative, and Bank D and Bank A are positive. So Bank D and Bank A can lend money in the cash market, lend ES balances, I should say, in the cash market to Bank B and Bank C, and they all net out. So there we are at the end of the day. We're square. The only difference, of course, is that the government's account is full to the brim, ready to spend on schools and hospitals, which is going to be fantastic. Okay, I want to make a little note here, which relates to what Gigi was saying earlier. So we talked about the corridor system just now, and you might have noticed that the amount of ES balances that was moving in and out of the system was almost entirely due to the fact that we were anticipating what payment needs banks have. So we didn't talk about changing ES balances to raise and lower the cash rate. And this is something that is a little bit different, and pre-corridor and still is a little bit different, which is how does the bank change the cash rate? I think the textbooks say that we would change the supply of ES balances to change the cash rate, but actually what happened in the old world, and still to the case today, is we would just move these lending rates, the lending rate, the deposit rate, and the cash rate target to a new level, and the cash rate would move to that level as well. So I've got a few little, I've got an example of that afterwards, but I just wanted to make that that point clear, that simply picking up this corridor and moving it to a new level was sufficient, and is mostly still sufficient today to changing the cash rate. Okay, and we can talk more if there's questions on that as well. Of course, you can see that everything has changed in the pandemic, not just for lockdowns, but also for the cash market. So prior to the pandemic, the period I was just describing, we had ES balances at a very low and consistent level here between 2016 and all the way into early 2020. But the board took a series of actions, some listed up there, bond purchases, the term funding facility, and the yield target, all of which acted to increase the amount of ES balances that were in the system. So we went from very low levels, around 20 billion roughly, up to, in I think 2022, as many as 450 billion in ES balances. So you might be then rightly wondering, well, how did things work in the meantime? So let's do it. Let's go right back to our supply and demand graph. Of course, we know that if the bank, which was previously the Reserve Bank, I should say, was very carefully targeting that supply line to a specific quantity, if that supply increased dramatically, we all know from telling our students that that supply line has shifted out to the right. The cash rate, of course, will be the point where the supply and demand curve cross. And if they now cross at a new lower level, as that supply curve moves out, there you have where the old cash rate was, perfectly on the target. Now we have the new cash rate, which is at a lower level. Importantly, it's below the cash rate target, but it's still above the RBA deposit rate. I'm sure you've told your students, there's no incentive for anyone to lend cash below the deposit rate, because they can simply, I should say, not cash, ES balances, because they can leave their ES balances in the RBA's deposit account. Okay, so how does this look in practice? Well, going back first to our stylized day in the cash market, I don't have any animations for you. I don't have any of my terrible design, because there was a large amount of ES balances for everyone. So the government account had some cash in it, but the banks all had large ES balances as a result of the board's actions. And so the planning of payments was much easier for them. So we don't need to be running large daily OMO operations, which we'll see in a moment. And those payments were quite trivial. Those payments were still happening at the exact and growing pace that they were previously, but they are still easier to facilitate. So I won't take you through that process again, but I will show you how this looked in the data practically. So 2 graphs here, we'll just fly through them quickly, and I'll hand back over to Gigi. So in the left-hand side on the top, we have daily cash market volume. So that's how much of those ES balances was being traded between banks every day. And you can see there's a frenzy of activity in the old system where those banks were all trying to square up at the end of the day. As soon as they had a large amount of ES balances, they didn't need to do that. And so there was very little volume. On the bottom panel, you can see the cash rate and the cash rate target. Just like we said in our stylized example, the cash rate now trades below the cash rate target and started doing so immediately almost immediately when those ES balances increased in early 2020. On the right-hand side, you've got OMO outstanding. So you can think of this, our open market operations, how much we were lending in ES balances to banks, additional ES balances above the newly created large amount that the board had created. And as you might suspect, it did tick up during the very scary period in the pandemic, but has then gone down to very low levels. The banks received a large amount of ES balances from the board's unconventional policies that we mentioned, and so they don't need that additional amount that they might come and get through open market operations. So that's the system at the moment, but ES balances aren't going to stay high forever. So I'm going to hand over to Gigi, who's going to tell us what the future looks like.
Thank you, Ben. All right, so we are in the post-pandemic period, and as Ben just mentioned, you can see that ES balances peaked at around 450 billion in late 2022, and they've since come down a long way from that level. And that has been because a lot of those unconventional policies that Ben just mentioned are in the process of rolling off. So in April this year, the yield target bond, the 3-year yield target that we have, the government bond that was linked to, matured. So when that occurred, the banking system paid back the money to the government. Is that right? I always get this wrong direction. That's right. Okay. Yeah, so ES balances came down. And then just a few weeks ago, the term funding facility wrapped up. So the final payments were made, and that's that big decline you can see in ES balances in the latest data. So Ben's side of our team were very heavily involved in receiving all of those payments from the banks, and everything went very smoothly. Well done, Ben and the team. So with ES balances coming down, we sort of had a decision to make about how we wanted to implement monetary policy in the future. We could have gone back to the system that we had pre-pandemic, the corridor system. We could have stayed with the system that we have now, the de facto sort of excess ES balances system where the cash rate trades below target. And central banks overseas are indeed using that system still. But we decided to do something different. And the way that I'm going to explain that is through this cash market diagram. So you remember that I sort of explained earlier that the supply curve in the cash market is vertical because the RBA tightly controlled the supply of ES balances to make sure it was just enough for those payments needs of the banks. So in the new system, all that is really going to change is instead of the supply curve being vertical, it's going to switch to being horizontal. So instead, well, big reveal.
Yeah, it's our only trick.
It's like a magic trick. Yeah.
Third direction.
So what that's going to mean in practice is that instead of us choosing a quantity of ES balances that we need to provide at OMO every day, we're going to set a price for OMO, and then banks are going to come to us and just obtain as many ES balances they need. So they're going to be responsible for forecasting what their own payment needs are, and they're going to come to the RBA at OMO and take those ES balances from us. So the price that they pay for that, which is the OMO rate, is going to be a really important interest rate and anchor the cash rate in the future. So that's really all that's going to change in the system. And to reinforce that, I'll kind of talk you through our stylized example of the banking system again, but I just wanted to illustrate how that's going to change open market operations. So open market operations are going to, in the past, they were quantity constrained. So we would decide the quantity to deal at OMO every day in the pre-pandemic world. Now OMO is going to be full allotment. So the banks are going to approach us. They're going to say, RBA, I want this many ES balances to borrow today, and we're just going to fully allot all of those bids at our OMOs. So that's what's changing with our open market operations, the primary thing that's going to change. So back to our stylized banking system. So at the start of the day, in contrast to the corridor example that Ben talked about earlier, you can see that the banks have a little bit more ES balances in their account. So we're not starting the day off with a very scarce amount of ES balances. And the reason for that is that in previous days, when banks came to OMO, they might have taken out a little bit more than they needed from us in ES balances. And so they have some sitting in their account at the beginning of the day. So we'll use the same example with the big tax payment going to the government to illustrate how this system is going to work. But first, we'll have OMO in the morning. Same time, OMO currently occurs once a week on a Wednesday. And so we'll run those operations, and the banks can come to us and take out as many balances as they want, as long as they can give us good quality collateral. And we can see in the example that each bank has taken out 1 unit at OMO. Then the big tax payment's going to happen. So you can see that Bank A and Bank C have each paid 2 units to the government's account. So that's an outflow. And then just like before, the payments throughout the day are going to happen. So yes, Bank A pays 1 unit to Bank B and 1 unit to Bank D. So you can see that Bank A is now in deficit, right? So the nuance that I want you to take away here is that compared to the corridor system, there's only 1 bank in deficit compared to 2 in the example that Ben gave. So now that banks have the opportunity to come out and take as many balances, ES balances, as they want from full allotment, we expect that fewer of them are going to be in deficit than prior to the pandemic. So there's probably going to be less need for them to trade in the cash market than in the pre-pandemic era. But, there can still be a need for them to use the cash market. And this might be either because they came to full allotment OMO and didn't obtain enough balances. So they expected, I would only need this many balances, and then a lot more payments out of their account happen than they were expecting. So that could bring them into deficit. Or they might choose to run a business model where they say, I don't want to borrow too many ES balances because I have to pay the OMO rate on those. And when I deposit them back at the RBA, I only receive the deposit rate, which is lower. So I'll just hold only a little bit of ES balances. And if I need extra, I can always go and borrow them in the cash market. So there's different reasons why banks might still want to use the cash market. But because banks can obtain as many balances as they want from the RBA, probably less of a need than in the pre-pandemic system. So as in the example before, we get to the end of the day and activity is still happening in the cash market. So in this example, Bank B's lent 2 units to Bank A and everybody's squared up, as Ben said before. So they've got positive balances. So that's how we expect the system to operate in the future. Not too different to what it was pre-pandemic. And this is what it'll kind of look like on a graph. So we expect the cash rate to trade near the OMO rate, and we wouldn't expect it to sort of trade above the OMO rate too often. So in that sense, you can think of the OMO rate as kind of like a soft ceiling for the cash rate. As I mentioned before, there might be reasons why banks don't take out enough ES balances from OMO, so they might need to come to the cash market and borrow. And if they're really desperate to borrow, they might be willing to pay above the OMO rate. So there are instances where the cash rate could trade above the OMO rate. However, the RBA's overnight lending facility is still there for banks, and that's still going to be a ceiling on the cash rate, just like it was pre-pandemic. So that's how the system's probably going to look in the future. When will we get there? Well, we don't know exactly, and that's actually one of the benefits of this system. As I showed on the graph before, ES balances are coming down, but we don't know how many ES balances banks demand. And I think for a lot of the banks, they're not entirely sure either how many they might want to hold in the future steady state. So as ES balances come down, we have this full allotment OMO. When we get to a stage where banks go, I don't have enough ES balances in my account, they'll come to our OMO and take out more. So we'll automatically transition to this new system. At what point depends on how many ES balances banks want to hold. Currently, what our team is working on is deciding the details of this system. So full allotment OMO is already in place, but we're investigating what should be the price, what terms should we offer, all different things like this. And so we'll be communicating that to the board later in the year. And PAE resources are coming soon. So we're working with Emma and Alex on some updated resources on MPI, so you can take this back to the classroom and hopefully teach it.
I'm just going to be really brief because I'm sure there may be lots of questions, but we did have a kind of we thought it'd be useful to say, what does a day actually look like when you are doing monetary policy implementation? So I'm going to just breeze through this. Someone is on the desk, it might be me, at about 7:30 in the morning, and the very first job we have to do is set the cash rate. So we're looking at the cash market transactions that happened the day before. If we're happy with those transactions, there's lots of guidelines about all of that, then we set the cash rate. What that means is pressing a button in a database and saying, yep, that's the cash rate. We tell the senior people what the cash rate is that day. Hopefully they're very happy with that as well. And then that information is sent out into financial markets, and it starts to influence all these contracts and various other things that are going on in financial markets. We've got a job I've mentioned up in the middle point there, which is market monitoring. So part of our job, as well as dealing, is understanding what's happening in financial markets. So we understand when things might go wrong, but also so we can inform Gigi's team about, what the market needs in its various systems, designs, and things like that. So around 8 a.m., we're then reviewing what's happened in financial markets the day before. We each day, or a few times a week, our senior staff have a meeting with the governor, Michelle, and of course with Andrew Hauser, I think you spoke to earlier. And their job is to tell the governors what's been happening in financial markets. And so our job is to review a large amount of information and give our heads of department a succinct understanding that they can pass on to the governors, who are obviously receiving information from all over the bank, from different places. So that's going on. Around this time, a really important thing happens, which is we go and get coffee, and we've got to get filled up, because at 9:20, trading with counterparties is going to kick off. We've got our open market operations for the day. Gigi said, you better get this right in my new framework. So we have a market that goes out to these, what we call market services, or Bloomberg and a few other pieces of software or trading systems like that. There's a notification that goes out. Almost started now. The banks have 15 minutes to send us emails or call us and tell us how many ES balances they want to borrow from us in the new system. By about 9:40, that's completely done. We have a Zoom meeting that again includes our senior staff. We review all these bids we've had. We call them approaches. And if we're happy that the banks are behaving and all the bids are at the terms we think are appropriate, then we'll fully allot those bids, and the banks will start getting their cash. And that's where the hard work begins, and the less glamorous stuff, which is a lot of bilateral emails back and forth with those banks, organizing the collateral that we're going to give, because remember, through OMO, we're not lending unsecured, we're lending secured. So we're going to organize all that collateral. There's lots of very boring details about how that's all done. Hopefully by around lunchtime, so we're going to go eat some food, which is fantastic. And we'll come back in the afternoon, and the top dot point there, market intelligence, we're going to do some liaison. So to aid us in understanding financial markets, we're not just looking at what's on a Bloomberg screen, or this number's gone up, the number's gone down. We are going to speak to the banks, both the parts of the bank that will come and borrow from us at OMO, but also other parts, the parts that trade government bonds or trade interest rate swaps or trade in various other things, because we want to understand those markets, and we can't do that well enough just by looking at numbers going up and down on a screen. So we ask some questions, often like, why did the number on the screen go up or down? And sometimes I have a good answer, and sometimes I don't have a good answer. So we'll write up that answer and say, here's the answer that we got, to again inform our senior staff, who will return informing the governors, and hopefully someone will say, we think this answer is right, or we don't think this answer is right as well. But we don't have a better answer than what we're told.
That helps.